So what do you think? Are we at the point where generally the American public can be reassured that we're not in as risky a situation as we were before, that too big to fail isn't as overarching a problem as it was before?
That is absolutely true. The system is much more stable. We made a major effort to get our large institutions and smaller institutions recapitalized here. So their capital base is more stable. Their lending standards have improved significantly. I know that's an issue now. Some people feel they've gone too far the other way, and that's a constant challenge for us to make sure the right balance is struck in extending credit. But overall, the system is much more stable. Banks' balance sheet continue to improve. Delinquencies and charge-offs, two key indicators of loan distress, those have been improving quarter after quarter. 80% of banks are profitable the last quarter. So I think, yes, the banking system is healing. The financial system is much more stable. And we're not done yet. We're not completely out of the woods yet, but people should feel better about it, yes.
One of the glaring problems that we saw as the crisis was unraveling was the lack of power of any of the regulators to unwind big financial institutions that were on the brink. The FDIC has been pushing very hard for that power. Do you have enough power in that regard now?
We do. We do feel we have the tools that we need under Dodd-Frank to unwind a very large institution in a way that would impose the losses on their shareholders and their unsecured creditors while protecting the broader system. So yes, we do think we have the appropriate tools, and now it's up to us, working with the Fed and the Treasury Department, to implement them. I think a key component of orderly resolution, orderly unwinding of a large institution is a pre-planning process, which is something we uniquely as regulators, again, working with the Fed, the primary regulator, can accomplish. We're working very hard with the Fed to develop rules to require what they call living rules or resolution plans, so that we would have a plan on the shelf to understand how the institution can be broken up and marketed should it get into trouble. So with the tools we have plus the pre-planning process, I think we're in a much, much better shape than we were going into this crisis.
Certainly the biggest overhaul of the financial system since the FDIC was created. Did it go far enough, and is there anything missing from Dodd-Frank that you would have liked to see?
Well, yes, it's not a perfect bill for us. We had one thing for the resolution piece of this. We wanted to have an ex-ante fund, so we wanted to be able to assess very large financial institutions to build up a fund that could be used. Right. Well, it's been assessed, but not a tax. It would have been devoted specifically to the purpose. It would have been kept in a fund. The way our deposit insurance fund is kept to cover insured deposits, this would have been kept to provide working capital for bank resolution.
Based on how risky?
Yes, and that was another advantage of it. We thought you could base the assessment based on risk factors, which would complement supervision. So we didn't get that, but I think the most important thing was to get the resolution regime in place, and we did get that. I think another area where we had some concern was the opening of the discount window to certain clearinghouses. The Fed's discount window in the past has only been confined to insured depositories, and we think, again, not to expand the government safety net. We would have liked to have seen it confined to that. That didn't happen. But so those are a few discrete areas where we think we would have taken a different approach.
When it comes to the transparency of the derivatives market as part of FinReg, do you think it goes far enough to make sure that banks don't play with fire or take too many risks and revert back to where we were?
Right. Well, I think there's a lot of work to do on the derivatives front, and that's really the lead authority with the CFTC and the SEC. But moving as much as we can into regulated clearinghouses should increase transparency dramatically. And even with regard to what they call the OTC market, when there will be some significant portion of the market that will still be OTC, regulators at least are improving their capability to see who has those positions and in what amount. So I think transparency has improved significantly with the clearinghouses. It will improve even more. And actually, I think a lot of the abuses and problems we saw with derivatives, a lot of that will be corrected just through transparency and regulators in particular, as well as the public knowing what kind of positions people are holding.